Verma once again before you. As you know very well, in accountancy for class 12 CBSE syllabus, we have been dealing with the chapter number 5, that is admission of a new party, right? And in the previous videos, I discussed solution of various numerical problems related to the same. Full-fledged numerical problems. The series is still going on, right? So in the same series, today we are going to have discussion on numerical problems with various adjustments, right? There are a few more numerical problems. So without wasting much time, let's start, right? You can see the question on your screen. So I have done a question here, problem number 20. Ayush and Piyush are partners sharing profits and losses equally. Their balance sheet as at 31st March 2020 is given below, right? So their old ratio is equal. Liability side we see creditors, bills payable, capital accounts. Ayush and Piyush are given. Current accounts, Ayush, Piyush are given. See, capital and current both are given. It means they are maintaining fixed capital method. Understood? Okay. Bank, debtors, provision for doubtful debts, plant and machinery, furniture and fittings, land and building, stock, bills receivable. Fine. Now let's read further. On 1st April 2020, Ritesh is admitted for 1/4 share in the profits on the following terms, right? Ritesh is to introduce rupees 50,000 as capital. Goodwill is agreed to be nil. In this question, there is no point of goodwill. Why? Because the partners have agreed that they do not want to have any kind of goodwill. Okay. So it is found that the creditors included a sum of rupees 30,000 which was not to be paid. Okay. A liability for compensation to workmen amounting to rupees 40,000. Okay. But there is no workmen compensation reserve. Fine, there is no problem. Provision for doubtful debts is to be created at the rate of 10% on debtors. It was decided to henceforth follow fluctuating capital method. That's the important point of this question. Because thereafter we have to follow the fluctuating method. Okay, how? I'll tell you. Bills accepted worth rupees 80,000 issued by creditors who are not recorded in the books. Okay. Ayush provides rupees 2 lakh loan to business carrying interest at the rate of 12% per annum. Prepare revaluation account, partner's current account and capital accounts and balance sheet of the new firm. Right? So, very first let me tell you something about a question. Whenever you are going to attempt a full-fledged question, numerical one, then you need to go according to the question. Okay, question asks the revaluation account. After reading the question, you have to chalk out that before preparation of revaluation account or while preparation of revaluation account, do I need to make some working note, right? So simultaneously we will make working note as well as we will do the entry in the revaluation account. Okay, so we will move according to the question. Otherwise, there are more chances of committing mistakes, right? So now let's move further. This is the format of revaluation account. Alright, so let's read the first line. That is not related to revaluation. That is not related to revaluation. Yes, this is related to revaluation. It is found that the creditors included a sum of 30,000 which was not to be paid. Means now this 30,000 does not exist anymore because it is not to be paid. It means the creditors have reduced by 30,000. Okay. So whenever the liability decreases, then it is mentioned here. Alright. Let's move further. A liability for compensation to workmen amounting to rupees 40,000. See, there is no workmen compensation reserve, but the claim is there. This is the new liability created. So here in this form, new liability created. So whenever a liability is created, means increase in the liability, it will be mentioned here to provision for workmen compensation claim 40,000. Right. So this adjustment is also done. Now, provision for doubtful debt is to be created at the rate of 10% on debtors. Let's read it carefully because here we need to make some working note. Okay. See, what is the value of debtors? 3 lakh. Alright. And what is the provision for doubtful debts already? 20,000. Okay. Right now we are forgetting that because we need to create the provision for doubtful debts at the rate of 10% on debtors. So if we calculate 10% on this, then it comes out 30,000, right? But out of this 30,000, we already have the provision of 20,000. So we need to create the provision only for 10,000. Understood the point? We need to keep the provision 10% of debtors. So debtors are of 3 lakh. So 10% of debtor is 30,000. Already we have the provision of 20,000. Then how much amount we need to create the provision for? That is 10,000. Okay. So whenever the provision is created, the entry is mentioned this side. So this is also done. Now any other entry? Yes, it was decided to henceforth follow fluctuating capital method. So that will be utilized at the time of capital and current account, right? Now bills accepted were the rupees 80,000 issued by creditors who are not recorded in the books. See, this item is related to the balance sheet, so I'll explain it to you only at that time. Okay. Now Ayush provides rupees 2 lakh loan to business carrying interest at the rate of 10%. So this is also related to balance sheet. So we'll talk about it later. So there is no entry related to revaluation here anymore. Okay. Now let's make the total. This side total is more. Okay. It means there is the loss. 50,000 is the total of this side, and when we deduct 30,000 out of 50,000, then we get 20,000. 20,000 will be distributed between these two partners as a loss. Okay, but remember here what I have written: partners current accounts, because we are maintaining right now fixed capital, and under fixed capital what happened? Whatever adjustments are there, these are done in current account. Okay, capitals do not change. Okay, so now let's divide that. They are following the equal ratio. So 10,000 each. Alright, so this is how we'll prepare the revaluation account. Now it's time to prepare current account first. Very first we'll prepare partners current account, and then we'll prepare partners capital account, and at the very point we will discuss this point as well, right? So here are the formats of current as well as capital account. I have prepared two of the formats together. You can prepare them one by one. So very first I'm going to talk about current account. Okay, see here. The current account balance is given only of old partners, right? So that is why I have made only two columns. Okay, so now let's put the values here. Alright, 1,60,000 and 1,40,000. Okay, now we'll put the reserve or any other adjustment related to goodwill, but no goodwill. Okay, adjustment related to reserve, but there is no reserve. Okay, then adjustment related to other things. Okay, so we have only the revaluation account, and that is also the loss, so it will be mentioned here, 10,000 each, right? We do not have any other value. Okay, then we'll make the total of that. Now we'll balance it. Now have a look what I have written here in the balance: two partners capital accounts. Okay, why I have written so? Just because of this line. It was decided to henceforth follow fluctuating capital method. If this line was not given, then I would have mentioned here to balance CD, and directly I will take this balance to the balance sheet. I would not prepare the capital account in that case. Understood the point? Okay. And if I had to prepare also, then I would just forward the balance. Nothing more I could do. Right? But here, from the current accounts of the partners, I will transfer the balance to the capital accounts of the partner. Okay, and now new partner has also come into existence. That is why I have made three columns. Alright, now how we will proceed further, I show you. Very first we will put the balances if any. The balances are given here, 6 lakh and 4 lakh, right? Now we will pass this entry. Okay, or we can mention the value brought by Ritesh. It's better to mention that first. See, here it is bank given, so better to follow bank. 5 lakh, right? Now we transfer this entry to here. Okay, here it is 2. Now it will come in by side by partners current accounts, right? 150 and 110. Okay, no other further entries there. If the partners have brought some more money or they had withdrawn some money, it would have been mentioned here, right? So let's make the total. Now let's balance them. Alright, 7,50,000, 5,10,000, 5 lakh. These balances will be forwarded to the balance sheet. Understood the point? Why we did that? One more time I tell you, just because of this entry. It is written here. Otherwise, on the basis of the fixed capital method, we would have forwarded this balance directly to the balance sheet as it is given here. We would have mentioned two balances, one as capital because it was remaining fixed, and another the current accounts. Understood the point? But due to this point, we made a change. Now it's time to prepare the balance sheet. Let's prepare it. So this is the format of balance sheet as at 1st April 2020, liabilities and asset side. Now let's put the values here. Okay, so very first let's start with creditors. See, creditors were 5,20,000. Okay, now there is one adjustment related to the creditors. Let's discuss this first. Okay, bills accepted worth rupees 80,000 issued by creditors were not recorded in the book. See, the bills which are accepted by our creditors, these are in actual the bills payable. And for that, what entry we pass? Have a look here. Drawer, or we can call it creditors, the one to whom we have to make payment. Okay, to bills payable account, because we have given the acceptance, right? Okay, 80,000. Now you see properly in this entry, there is no relation with the revaluation account. And what the question says? The question says that it was not recorded. So if we record this entry right now, then what's going to happen? Creditor is going to decrease, because whenever any liability is debited, it means it is decreasing, right? And another liability is being created, that is bills payable, right? So if we see the total liability side, it will be increased by 80,000 in form of bills payable, and it will be decreased by 80,000 in form of creditors, right? How the treatment will be done, I'll show you. Okay, 5,20,000 we have in creditors balance. Okay, we will deduct 80,000 related to this entry. Understood? Now, already we had one adjustment related to creditors, that is 30,000. That also reduced, so we will deduct that 30,000 as well. Right? Now let's calculate that. 4,10,000. Okay, now let's talk about bills payable. So bills payable earlier was 2 lakh, and as I told you, the liability is increasing, so 80,000 will be added here. So it becomes 2,80,000. So if we see in the liability side, it increased by 80,000 and decreased by 80,000. So in total, there is no difference. So the difference is here. Okay, if we do not pass that entry, if we do not do this treatment, examiner will deduct marks here. Understood the point? Okay. Now let's move ahead. These two are done. Now capital accounts you can put here. We have only capital accounts now because current accounts are closed now. These have been transferred to capital accounts. So let's have a look here. I use 7,50,000, Piyush 5,10,000, Ritesh 5 lakh, in total 17,60,000. Okay. Now let's see the asset side. Asset side we have bank. Okay. Let's talk about bank. We earlier had the balance of 2 lakh rupees. Okay. Now Ritesh brought 5 lakh, so it will be added here. He has not brought anything in form of goodwill, otherwise it would have also been added here. Okay, now one more thing. Yes, Ayush provides rupees 2 lakh loan to business. So he must have given that amount through bank. So that will also be added here. Okay, and this loan will reflect here as well, because it becomes the liability of firm. Okay, understood the point? Now we will not do anything related to treatment of interest on loan. Why? Because this will be treated next year. This year he has provided the loan, so interest will be charged next year. Okay, so here it will not be done. Understood the point? 2 lakh was the opening balance of the bank, 5 lakh new partners capital, and 2 lakh due to loan. Okay, in total it comes out 9 lakh. Now let's talk about debtors. Debtors were 3 lakh. Earlier the provision was of 20,000, but we increased the provision by 10,000. So now provision for doubtful debt is 30,000, and the debtors come out 2,70,000. Okay. Now let's talk about plant and machinery. There was no change. Furniture and fittings, no change. Land and building, no change. Stock, no change. Bills receivable, no change. Alright, now let's have a look. Maybe possible anything we left. Yes, we got it. 40,000. This is also a liability for us. Okay. So now let's make the total of that. So let's see this side total. 26,90,000. Now let's see the total of this side. This side also 26,90,000. Right. So when total of both sides match, it means we are correct. Alright. So this is the way to prepare the balance sheet. One more time explain this point. 80,000 was added here and 80,000 was reduced here. Okay. And here loan came and claim came. Okay. And here we did an adjustment related to the provision. And this bank, 2 lakh was the opening balance, 5 lakh partner's capital, and 2 lakh this loan amount, right? So this is the way to prepare it. Okay, so here also I am not ending the series. One more question we are going to attempt in today's video. So you can see the question on your screen. So I have written the question here. Let's read it out. Problem number 21. The following is the balance sheet of Pawan and Samaksh as at 1st April 2020. They share profits and losses in the ratio of 3:2 with interest on capital at the rate of 10% per annum. Let me tell you something about this question. Okay, before I read further, see, this question is different from the all other questions that we have done so far. Why? Because here in this question, a partner is being admitted to the firm in the mid of the year. In other question, the partner was either joining at the end of the year or in the beginning of the year. But here it is joining in the beginning, which is the practical thing, right? So when it happens, then how the things are going to be managed, that we are going to tackle in this question. Okay, so generally what happens when the partner joins in the middle, so before joining the new partner, whatever the profits, reserve, etc. are there in the firm, these are supposed to be distributed. Okay, and after a partner joins, because the year has not been completed, okay, thereafter the profit is supposed to be distributed among the all partners, including the new one. How? I'm going to show you, right? So let's read further. Balance sheet is given to us as at 1st April 2019, right? Liability side, creditors, bills payable, capitals, Pawan, Samaksh, bank, debtors, stock, land and building, plant and machinery, furniture. On 1st January 2020, that is the mid of the year, because when the year starts on 1st April 2019, it is going to end on 31st March 2020. Okay, so in the mid of the year, after 9 months, he joins. Raman was admitted on the following terms. Raman is to bring rupees 1,25,000 as capital and rupees 10,000 as share of goodwill. Partner's capital will carry interest at the rate of 20% per annum. See, earlier they were getting 10% per annum, but after his admission, they are going to get interest at the rate of 12% per annum. New profit sharing ratio, Pawan, Samaksh and Ritesh will be 964. Pawan will be entitled to get 5% commission on the net profit after Raman's admission. Okay, the profit for the year ended 31st March 2020 before providing for Pawan's commission and interest on partner's capital amounted to rupees 80,000. See, this 80,000 is the profit for the year ending. Okay, partner joined in January. These were the terms and conditions, and at the end of the year we came to know that the profit is 80,000. On Raman's admission, land and building was revalued at rupees 1,20,000. Furniture was appreciated by 10%. Plant and machinery was increased by 10,000, and stock was overvalued by rupees 5,000. Creditors reduced to rupees 55,000. Prepare profit and loss appropriation account for the year ended 31st March 2020, and also prepare revaluation account, partner's capital account, and balance sheet as at 31st March 2020. Right? So let's start. Very first we need to prepare the profit and loss appropriation account. Okay, see, we need to prepare profit and loss appropriation account in two parts. One before joining new partner and another after joining of new partner. Understood the point? Okay, but the problem comes here that we have been giving the 80,000 profit of the entire year. Okay, but there are two segments of this question. One, the period before the new partner joins, and another after the new partner joins. So when we have practical situation, then we come to know that how much was earned before the partner joined and how much was earned after the partner joined. But in this question it is not given to us, right? Only 80,000 consolidated amount is given. Okay, so let's see. The period before the new partner joined is of 9 months. And the period after the new partner joins is the 3 months. Right? We can see that from 1st April to 31st December. We can calculate there are 9 months, and from 1st January to 31st March there are 3 months. Okay, so we will divide this profit amount according to this. Right? So for 9 months the profit will be 80,000 multiplied 9 by 12. Okay, it comes out 60,000. Alright. Similarly, for 3 months, we consider it 20,000. Understood the point? Okay. Now, before the new partner joins, all the adjustment related to interest and other things will be done between the old partners on this profit. Okay. And after the new partner joins, then everything will be done including the new partner on this profit. Okay. So we can prepare profit and loss appropriation account in two parts. There are two options. Either we can prepare combined profit and loss appropriation account having two columns of account, or we prepare it separately. I just better prepare it separately and I will explain you how to prepare it in combined. Right? So let's start. So this is the format of profit and loss appropriation account. This is there for 9 months ending on 31st December 2019. Right? As I told you that for 9 months we will take the net profit as 60,000. Right? Now we need to do the adjustment, and there is only single adjustment that is related to the interest on capital. See, this rate is given 10% per annum. Fine. Now let's see. For per if we calculate on 1,20,000 by 10%. Okay, but it will be calculated for 9 months. Okay. 1,20,000 multiply 10 by 100 multiply 100 by 12. So if we calculate that, it comes out 9,000. Now similarly we calculate for Samaksh on 80,000, it comes out 6,000. Alright, so total is 15,000. No other adjustment is there. Now let's look at the total. See, don't get confused. This commission will be paid in the second part of the profit and loss appropriation account, not this part. So 45,000 they will distribute with each other, and in what ratio? 3:2. 27,000 and 18,000. We divide this amount in the ratio of 3:2. Alright, so this will be the first part of profit and loss appropriation account. Alright, now after this we can prepare revaluation account, or we better prepare the second part of the profit and loss appropriation account. Okay, so let's prepare the second part of the profit and loss appropriation account. So this is the format of the second part of profit and loss appropriation account for 3 months ending on 31st March 2020. Understood? So very first we will put profit and loss account means net profit, that is 20,000 here. Okay. Now we'll put the interest on capital for Pawan, Samaksh, and now new partner has also come into existence. So now we need to calculate the interest on capital on these three. Okay. But actually we need to very first calculate the capitals of Pawan and Samaksh on 1st January 2020, because these are the opening balances of these. After this there are few adjustments. I just show you. I just write down for Pawan and Samaksh. See, the opening balance was 1,20,000 and 80,000. Right? So after that they got interest on capital that we calculated in the first part of the profit and loss appropriation account. That was 9,000 and 6,000. Right? And then they got profit. It was 27,000 and 18,000. Now, one more thing is left here. This new partner brought 10,000 as goodwill. Okay. Now, this 10,000 will be given to the old partners as a compensation. So this 10,000 is divided in the 3:2 ratio. So it comes out 6,000 and 4,000 share of goodwill. Now, on 1st January 2020, the capital balances will be, let's calculate that. It comes out 1,62,000 and it comes out 1,08,000. Alright, now on this amount we can calculate the interest on capital, but at the rate of 12% for 3 months. Okay, so for him how much it comes out? 4,860. Let's mention it here. Now similarly let's calculate for Samaksh. 1,08,000, 1,200, 3 by 12. Nowadays 3,240. Alright, so let's mention it here. Now let's calculate for Raman, the new partner. See, we did not mention it here because he is coming on the very gate, so he is bringing 1,25,000. So we'll directly calculate on 1,25,000. 12 by 100 multiply 3 by 12. 3,750. right? Let's mention it here. Let's see the total of this. Alright, so once again I explain you, we need to calculate the balances on Pawan and Samaksh on 1st Jan 2020, because only then we can calculate interest on capital. Okay, so that is why we did that, and then we calculated. Okay, now let's move further. See how many points we have covered. This we have covered, this we have covered, this new ratio will be utilized, and this, yes, Pawan is going to get the commission, 5% commission on net profit after Raman's admission. So after Raman's admission, net profit is 20,000. So on 20,000 we can calculate 5%. It is 1,000. Okay. Alright. Now let's move further. This point is also done. Profit for the year. This is done. On Raman's admission, yes, these will be related to the revaluation account. Any other point I do not see. Alright then, distribute the profit among all these partners. So this is the total, 20,000. This side total is more. And when we deduct this amount, then we get 7,150. Now this amount will be distributed among these partners in new ratio. And what is the new ratio? 9:6:4. Okay. So I have made it round off. So for Pawan it comes out 3,387. For Samaksh it is 2,258. And for Raman 1,505. Right. This is the second part of the profit and loss application account. Now we can do one thing. If you want to make it combined, then we would have made one more column here, then 9-month amount would have come here, okay, and 3 months here. So that would have been the combined one. But why I chose the separate ones? So that you people can easily understand. Okay, now let's move further. We need to prepare the revaluation account and thereafter partners capital account and balance sheet. So this is the format of revaluation account. Remember one thing, we are making this account on 31st December 2019. Okay, because on the date of admission of a partner it is made. Okay, so or we can say before that. And this adjustment will be shared only between the old partners. So let's read further. Here the conditions are given. Land and building was revalued at rupees 1,20,000. So earlier it was 1 lakh, so it has increased by 20,000. Right? Very easy. Second one, furniture was depreciated by 10%. Furniture value is 40,000. If we depreciate it, it is 4,000, but it will be mentioned in this side. Alright, let's move further. Plant and machinery was increased by rupees 10,000. So directly amount is given. So we can directly put here plant and machinery 10,000. Okay, now the stock was overvalued by rupees, means it is already overvalued, means it is more by 5,000. So we need to reduce it. Don't come into mistake while understanding these adjustments, okay? Because the language sometimes is a bit confusing. Creditors reduced to rupees 55,000. So earlier the creditors was 60,000. Now we have to make them down up to 55,000. It means 5,000 creditors are going down. So whenever the creditors means any kind of liability gets down, it will be mentioned here. Any other adjustment? No, I don't see that. Alright, that's good. Which side total is more? I think this side. 20,000, 10,000, 35,000. Okay, now 26,000. Right, so this 26,000 will be divided between the old partners in the old ratio. What is the old ratio? 3:2. Alright, so Pawan will get 15,600 and Samaksh will get 10,400. Now, let's prepare the partners capital account. So, this is the format of partners capital account. Now, let's make the entries. What are the balances? The same values we need to put here. Very first they got interest on capital as 9,000 and 6,000. Then they get share of profit and loss appropriation account 27,000 and 18,000. Then they got premium for goodwill 6,000 and 4,000. Understood the point? Okay. Now let's talk about the second profit and loss appropriation account. But before that, we need to mention this partner brought his capital. Whenever it is bank here, then do mention bank here. Okay, so he brought 1,25,000. His goodwill has been treated. Now we'll put the new values here, like interest on capital. Whatever the value we calculated, we'll put here. So these were the interest on capital for 3 of the partners. Okay, now Pawan got commission as well, right? So only Pawan will get that 1000. Now in new profit and loss aggregation account, they also got share of profit, so that has to be mentioned here. Okay, so what is that? We already calculated that. Alright, so these were the share of profit. One more thing we are forgetting, revaluation. Only these two got, right? Now, no other adjustment is left. Read the question one more time. I think all the adjustments are done here. Now we need to make the total of it. That will be the total as well as the balance. Let's calculate it. So for power it is 1,86,847. Now let's calculate for Samaksh. So for Samaksh it is 1,23,898. Now let's calculate for Raman. So for Raman it is 1,30,255. These will be called balances as well, right? So these balances will be provided to the balance sheet. Alright, nothing new in it. This is the interest to capital transfer from the first part of the profit and loss aggregation account, and this is the profit. Okay, and this is the premium for goodwill. This is the interest on capital transfer from the second part of profit and loss aggregation account, and this is the commission. This is the profit of the second part, and this is the revaluation profit. Okay, now let's go to balance sheet. So this is the format of balance sheet as at 31st March 2020. Liability side, asset side. Okay, so let's put the value. Let's talk about the creditors. Creditors value have been reduced to 55,000. I put it. Now bills payable. I think there is no change in the value of bills payable. So 20,000 will be mentioned here as it is. Alright. Now capital. So the capital balances will put here. Okay, so these are the capital balances. Now let's make the total of this. The total comes out 4,41,000. Alright. Now let's move further. No other item is there in the liability side. Now let's talk about bank. We will calculate later at last. Let's talk about debtors. There is no change in the debtors. 10,000. Stock, there is a change. 5,000 we have reduced. So it will come as 55,000. Again, land and building 1 lakh. But they have increased the value. It has become 1,20,000. Plant and machinery. Okay, plant and machinery earlier it was 80,000, and what they said to be increased by 10,000, so it becomes 90,000, right? Now let's talk about furniture. It will be reduced by 10%, means 36,000 will be the remaining value. Okay, any other item? I don't see that. Now let's calculate for bank. Bank initial balance was 10,000. Okay, 1,25,000 will be added. Capital of Raman plus 10,000, share of goodwill plus 80,000. Now you will ask me why 80,000? So there is a twist behind it. Okay, it comes out 2,45,000. Let's make the total. I'll explain it to you. Have patience, but let's make the total first. This side total is 5,16,000. Let's make the total of this side. This side total is also 5,16,000. So when the totals are matching, it means this is correct. Okay, now explain. This is of profit. See, when a firm starts working, they start earning profit. Okay, so profit will be there either in the form of cash or in the form of bank, or the firm has either purchased any asset out of it, or they have made any payment out of it. Okay, here we saw there is no change in the debtors, right? Okay, means we did not make any credit sale. All the sales was there in cash. Okay, one more thing. Here we did not make any payment to any creditor. That is only the reassessment of the value. We did not make any payment to creditors, right? We did not buy any asset as well. This is the revaluation only. Okay, so neither we bought any asset nor we made payment to any liability, and we did not make any credit sale. It means entire income we had in form of cash, and here only bank is given. It means we have directly deposited that amount into bank. Understood the point? So that is why this 80,000 will be added here. Okay. Now this is the outcome after the distribution of profit. Whenever partners are willing to withdraw the money, then they can withdraw up to this from their account. Okay, and from their account the cash entry will be passed and amount will be deducted from this place. Understood the point? So that is the another matter. Okay, but this amount at present is there in the form of cash, right? So that is why I have added that 80,000. Alright friends, so this was all about this numerical series. Ends here. I hope you must have enjoyed all the videos related to this chapter. Very soon I am going to meet you with another video. Till then, thank you. Bye bye.